First half of 2019 has been pretty challenging. We've had a mixed picture of what's been going on in the business. We've had healthcare, technology and industrial performing really well. We had growth of 8% in healthcare, 11% in technology and 13% in industrial. In contrast to that, semi-fab's back 34% on a reported basis, 47% on an organic basis. That sector's been really hit by weakness in the memory market, which we were talking about in the latter half of last year. But we're really well positioned in that market. We've had a lot of design wins. The long-term prognosis for that industry is good. And when that comes back, as we expect it to, we'll be in much better position there.
For the first half, financial performance has been mixed. Revenue was up 6%. Gross margin was down and margin was at 44.6%. And this flowed down to profits, which were also down on the prior year. So gross margin has been where we've felt a lot of the pressure. In the US, we've had 301 tariffs for any imports from China into the US. This is running at 25% of the import price and has impacted us quite significantly in the first half. We are in discussion with our customers to recover that and expect an improvement in the second half of the year. The other factors, we've had adverse geographic and product mix that's impacted the gross margin. And finally, currency, while being a benefit in the reported numbers, is actually a reduction in the percentage. We've recommended a dividend of up 6% at 35 pence for the first half. This recognises the confidence the board has in the ongoing performance of the group.
On a geographical basis, it's a very mixed picture. Asia's done very well off a reasonably low base. We were up revenue-wise 36%, US dollar terms, constant currency, which is very encouraging. They're doing very well there with the new products that we've brought into the portfolio through our acquisitions. Europe also doing really well, up 11% year on year, so that's really encouraging. But what we've seen is the US back quite considerably due to the semiconductor manufacturing industry. We completed the Vietnam expansion in the early part of this year. That's been really timely. We've been very busy over the last 12 months transferring products from China into Vietnam. The labour costs in Vietnam are just above half of what they are in China, so a good competitive advantage there. But more importantly, the Vietnamese product doesn't attract the Section 301 tariffs as the Chinese product does. There is a possibility the tariffs could be extended to Vietnam. If that happens, I mean, we'll just have to deal with it if it does. But that aside, I mean, the cost advantage of being in Vietnam would far outweigh, putting manufacture into the West.
We've continued to invest in our business in the first half. This is much more about medium-term growth. We're investing in R&D to develop new products and new product families that will come to the market in the next 2 to 3 years. Big investments we've done. We completed the construction of the extension in Vietnam. We have announced we're closing one of our production units in the US and moving all of the production to Vietnam. This will be completed by June 2020, and the ongoing savings will be about $5 to $6 million a year. We will invest some of that back, but the majority will fall into improve the profitability of the business.
We've actually had a very good design win performance in the first half of this year. Putting that on existing design wins, there's probably a 10% growth on an annualized basis, which I see as indicative of the long-term revenue projection that we should have for the company. And those designs have been across many sectors. Healthcare continues to do very well, but a lot of it's become more and more high power, high voltage, and again, more connectivity, more firmware, more software, adding more value to the customer, which they're willing to pay for. And again, we've seen lots of good design wins in industrial, particularly with the new higher power products across a number of niches in industrial. And then finally, technology's continued to be very good for us. Broadcast in particular has been good. We had a lot of questions about the semiconductor manufacturing industry and, given that it's very cyclical, is it really the right industry? We believe it is. I mean, the long-term prognosis for that market is very positive indeed. I mean, silicon's going into almost every device we can possibly think of, driven by big data, artificial intelligence, the Internet of Things. And even in a lot of the designs that we're doing now, more and more of them are involving engineering services where the power supply is communicating with the customer's end equipment either through an Ethernet connection or over the internet itself, just justifying, silicon going in everything in the world becoming more and more connected. There's more and more demand for memory, even though there's a surplus of supply at the moment. So our view is we've got the right products, we've got the right engineering services, and when it comes back, it's going to be really positive for us.
Cash performance in the first half has been strong, and this is the result of the unwind of the inventory that we built in 2018. This will continue for the second half, where we expect an equally strong cash performance.
In terms of outlook, there's a lot of issues going on in the world, as there always is. But despite the issues we've had with tariffs and transfer of manufacturing, the design wins have been pretty strong in the period, and that fills us with confidence for the future. Semi-fab, as we've discussed, that's going to come back, but when it does, I think we're going to see very, very good, not only cyclical recovery, which is going to benefit us, but actually we've had a lot of market share gains. We're transferring more product into Vietnam. That's going to help our cost base. We announced the closure of our Minden facility, and that's going to have very, very good savings, which should actually help our margin recovery going out into 2020. So all in all, we're very positive about the medium and long-term prospects of the business.